at any point of time, if the price presents between the buy entry and the sell entry of any cycle, specifically for the first cycle, then what to do? In this situation, I will suggest not to trade because all days are not trading days. You have to understand all days are not the trading days. At any particular point of time, if you are finding the price of the instrument, it's just oscillating between the buy entry and sell entry of the first cycle, then it is better not to enter the trade, better to see some other counter. So that will be the best approach to stay away in the range bound market. In the range bound market, whatever the efforts you will put, it is not going to reward you. So better to stay away on those kind of market. So that will be the best solution. If the price is just moving between the buy entry and sell entry, not giving you any breakout, then that time you should not trade. If you are facing any difficulty in using the software, you have taken a reading, you have not got the result, or you have taken a reading, you could not able to enter a trade. If any such queries are there, please ask in this particular forum. This session is only for the buyers, those who are the buyers of the product. I'll be meeting twice to them in a month as per the buyer support program. First Friday of month, last Friday of the month. Timing little bit may change. So the main agenda of this particular meeting is just to make you understand this tool in a better way so that you can take the best benefit of this particular tools. So here Nines Mokonaji is asking one more question: how to choose the perfect strike for hedging? So this is a question being asked by Nines Mokonaji. So if I just go to the index future or any of the counter I can go, I'll just, so this is how you are analyzing and trading. So once you load the data and calculate, you are getting the values of first cycle and second cycle. So here, once you are buying at 9988, you have multiple choices which strike option I should choose for the hedging. So the strike what you will choose for the hedging will be nearest strike. So nearest strike, when I say this particular example case, you can say if you are buying here 10,000 will be the nearest strike of put option you can hedge. If you are selling at 9958, the nearest strike will be 9950. 9950 call option you will be hedging it. So this is how you can hedge, and these are the best strike options you can hedge. The reason is, by this principle, if you go to the stock options and if you choose any other strike options, then the liquidity will be less. Certain times what will happen in the stock option cases, if you hedge the just in the money option or just out of money options, you will be paying a very heavy time value. So in that case, try to sell some options and neutralize that time value. For example, I can say if you are going for the counters like some pharmaceutical, counters like Aurobindo Pharma, they are having a very high grade of volatility. So they are, say if we are just loading the data of Aurobindo Pharma and just calculating this data, it is telling 742 we should 742, 743 we should buy, 737 will be our stop loss. So the nearest strike option which will be going for 740. If you are buying at 743, 740 put option will be hedging. If you are selling at 737, then also you will be buying a 740 call option. So 740 is the nearest strike. Then only the strike comes 720 strike and 760 strike. So in this case, in both the cases, you can find out. If you go for the options of Aurobindo Pharma will be highly pricey. So 740 call option, if you just look into this premium part, it is 26 rupees. Same as for the put options. So if you go for the put option 760, this two also you will be getting 26 rupees. So this is very pricier options. So if you are hedging this particular instrument, if you are buying here 743 and hedging with 740 put option, so that also 26 rupees if you have paid, and if you are hedging it in that, or hardly once it moved by 2 to 3 rupees, hardly some 1 rupee discount you will be getting here, 25 rupees if you are hedging it. I will rather recommend sell on 760 call option. So you have bought a future you have buy the future, and you have a put option 26 rupees, you have a put option. So this 26 rupees of put option what you have paid, it is a very heavy premium, very high amount of time value you paid. Try to add a further hedge. So here second cycle death zone is coming to 762 above. 760 call option one you can sell it up. So your future and call option sell will be converted to a covered call position, and this will be the covered, means you will be having one options here for hedging. Or strictly if you are buying for this 26 rupees premium, this put option, and buying a future, strictly you stick to the intraday trade. Do not ever take such kind of position for positional trade. If you do not want to sell this call option, then better don't initiate a future long with put option or future short with call option for this kind of counters, where the time value of the options is very high. Even though if it is moved by 20-25 rupees, and if that doesn't move in a particular period or 2 to 3 days of consolidation happens, then there is a sudden fall in the IV you can get, and that sudden fall of IV can drag down that premium to a great level. So you may not get any profit also. So for that also you have to hedge it very carefully. Stock scanner is being added. He's asking, is there any way to find which are in the between a buy or sell level? So if you just go for this stock scanner feature, normally around 10 o'clock this will be get activated. So you can find out the stocks in the uptrend. Which are the stocks in the uptrend? You can find it out here. Stocks in the downtrend, also you can find it out. Stocks those who are given gap up, stocks which are given gap down. As per the one standard deviation principle, stocks those who are in the between the buy and sell entry they have opened. Between the buy and sell entry they have opened. So these stocks you can get, and you can just choose that stock what you want, and you can just go for analysis. You can get their analysis also. So this feature is being added very recently in our tool. So 9:45 to 10 o'clock, this period itself, it will be get activated, this scanning activities. Post that you can make use of this tool. It is giving you the same reading, however, it requires some time to filter out all those things. So this is very clearly I have written in the manual also. For cycle 1, for buying 743, if you are buying this particular counter, 737 is your stop loss. What about for the cycle 2? When you go to the cycle 2, cycle 1's growth cluster will be your stop loss in the uptrend. When you go to the cycle 3, then the cycle 2's growth cluster will be your stop loss. Same way for the downtrend. Once the downtrend you are going to the cycle 2, then cycle 1 decay cluster will be your stop loss. If you are going to the third cycle of the downtrend, then second cycle's decay cluster will be your stop loss. What is this cluster? Cluster is known as the most important resistance and support point in that particular cycle. One thing always I used to tell, we can able to calculate the market. We cannot snatch anything from the market. It is so huge that market is so huge. The number of participants in the market is so huge that at any point of time we cannot find a perfect majority in any one side. So I'll tell you one very simple example. Whenever market fall happens, many counters used to lose their value. What happens there? If that counter is being sold out, definitely there is a buyer. Definitely there is a buyer. So no point of time, you can say that you have 100 shares of Aurobindo Pharma you sold, somebody has bought it, or no one has bought it, exchange has given you the money. That doesn't happen. Exchange will never give you the money. When you sell the share, somebody is the buyer, even in the case of market fall. What happens here? The level of confidence. The buyer will be a new buyer. Maybe that buyer wants to take a risk at that particular point of time. When anything very bad happens in the case of a company, no buyer will be there for that product. So if there is no buyer, there no trade can happen. So whenever people say that market fall is happening, so all are exiting the market and going for holiday, that is a theoretical assumption. Market is falling and all traders are just quitting their position and going for holiday, that is a theoretical assumption. When they quit, some other trader has taken that position. That doesn't mean that no one has taken the position and that money is being given by the exchange or the broker. It never happens. So this is the very internal of the market. So here one thing is very clearly we must have to understand, and every week's report also I used to write as a special segment here, range bound trend identification. When the price move between 0.5 resistance and retraces back, you can find out it is a ranged action. Ranged action. So you enter at 0.236, 0.382 is there, 0.5 you have touched, you have retraced back. And if you are just retracing back to 0.236, entire 100% you have retraced back and not moving further towards the 0.382, better to quit. That is a range bound market you can identify, and that particular time it is better to quit that trade and come out. So range bound trend identification, this is the process. 0.5, what you have experienced in the Nifty future today, Mr. Ramkumarji, this is well said before. Before in all the reports you will find out this is one section is being added. This same section is there in the manual also. So it is not we will not get a final confirmation. There is nothing wrong in the calculation process, nothing wrong in your entry, nothing wrong in your expectation or analysis. Yes, after we did the analysis, we have not achieved the optimum target what we have expected. And 0.5 level, if it is retracing back and it is coming back to 236 level, just surrender that trade and come out. That will be the best options we can do. Condition, Mr. Srinivas Murthy ji is asking about extreme volatility condition where first cycle buy entry levels, sell entry levels both have achieved, and again it comes to the sell entry level. Nothing wrong in entering the things, you are going with the trend. Nothing wrong in entering the trade. You can re-enter the trade, but do re-enter the trade along with the hedging. In this particular case, what you are mentioning, sell entry all targets achieved, buy entry all targets achieved in the first cycle. In such situations, the volatility would have been increased to a great extent. Your options will become pricier. So look into the options what you are hedging carefully. So it will be very pricier. What will be the best IV suitable in the intraday options? There is no such theory is there. What is the best IV? Whenever you trade in the option intraday, all IVs are allowed for you. IVs all of a sudden never falls in a day by 50%, 40%. Yes, there should be a contraction. So based on the Vega factor only it contracts. Nothing, no such rule is there that this IV is there means we should trade. That IV is there means we should not trade. It is not that. You just look into the very low IVs less than 10% if it is there, 7, 8%, 10%. Maybe the targets may not be enough to meet your expenditures. So look into the expenditure first. And very high IV factors also not suggested for intraday trade. So better stick to the Nifty and Bank Nifty options for intraday trade. That will be best because that two instruments has the liquidity. Hedging is a good practice. I can give you one more example. You do not have any disease now. Why you take a health insurance? In future you may get a disease. So you will be telling that I am healthy and healthy, every day I am walking, every day I am jogging. So there is no point in taking a health insurance facility. Walking and jogging doesn't guarantee that you will not get cancer. Same way, you buy a new vehicle, you are a very experienced driver, but as soon as you take the vehicle, you are taking a insurance. Why that? You can say that my roads are clean, there is no ditch there, and I am just moving between 2 points from my office to my house. So there is no accident, case of accident can happen. Very low probability and null probability of accident, but still I do not want to take the insurance. So you still take the insurance. So do not mix the factor of hedging with one outcome which is not calculatable, a outcome which no one can able to identify. Can any analyst in this world can tell me that tomorrow onwards Nifty will go for a one-way movement upward or downward without looking back? If any analyst tell me that, then I will think that he is the greatest fool in this world. Same way, no indicator is available in this world so far. We can say that, yes, this indicator given me a buying entry and the prices will never fall back. So whenever we talk about Elliott wave, most of you carefully understand this part. When we talk about Elliott wave, there is a concept called wave failure. Wave failure. If you would have studied those concepts, you would have heard about a term, wave failure. Wave 3 failure, wave 2 failure, zigzag pattern failure, Fibonacci failure. So every concept having a proportionate failure percentage. This weekly reports what we are getting, you are getting now, that's to also have a 10, means out of 97 weeks, 10 weeks are failure. So always there is a part of failure associated with this thing because you do not know the crowd who are involved in this trade, you do not know the human emotions involved in this particular trade. So thinking that one way movement will happen and because I hedged my profit got sacrificed, it is wrong. Hedging is a good practice. The way you take a health insurance, the way you take a vehicle insurance, same way you have to think and take care of your money. If you know the art of protecting your money, definitely it is going to grow. definitely it is going to grow. But if you do not know that art, one failure itself will be very, very costlier for you as compared to 100 successes. So that is a fact you need to remember. Sending to all of you. So here, whenever the price fall, volatility will rise. Volatility and price having a inverse relationship. Price fall, volatility will rise, and price goes up, volatility will fall. Volatility will fall. But always drawing a unidirectional view, like Mr. Ajayji has told few seconds back. Hedging reduces my performance. Hedging reduces my performance. Same way, this is the question come from SN Suresh. Do not draw any unidirectional view in the market. Price has fallen, no doubt IV has increased. You have sold it. Simple one price fall does not take care of all your technicalities of a option. If price further falls or price fall and rise happens very quickly, then your IVs also can increase. You can sell instead of simply selling here. If you can form a net credit spread instead of forming a simple selling the options, if you can form a net credit spread in put option, then I can say that yes, this is a good thing. You have at least form a spread. If further fall happens, further increase in IV happens, you are protected. Simply because the IV has increased because of a price fall and sell the options and sit quietly, that is not a good idea. Investment. How to select a best stock for investment? Ram Kumarji has asked. Like you can say how he can select a best stock for the investment. I think he is not asking about the investment. How to select a best stock for trading so that he can get some good profit. Especially for the, he's asking about for the intraday trades and all. So definitely go with the high volatility stocks, which is out of these stocks, whichever is high volatility stock, go with that. That will give you good profit in intraday because they have the highest probability to achieve the targets. He's telling when he trade in Nifty, he has it with the ATM at the money options, call options and put option, and he doesn't put a stop loss. Is it definitely okay? And whenever there is a trend change happened, so you hedged it, no doubt about that. Trend has been changed. Suppose you bought here 9972, trend is changing at 9920. You hedge it with the ATM options, say 9950 put option or 10,000 put option, you hedged it. Trend has changed. It has come to 9920. So if it penetrates 0.382 level, better to reverse the trade. Nothing wrong in the earlier trade. You protected the money. Out of this 50 to 70 points, what is being lost in the future, out of that 70 points, 30, 40 points you have recovered from there. Trend has changed, so there is no point in maintaining this trade. Better to change the position. Be a seller, hedge it with a call option. So nothing wrong in that practice, but keep that practice alive. Keeping the practice alive is very important. Consistency is very important. So here Nines Mapanyaji also is today's room he present. I think years back he has given me one view on the Nifty futures 1 year's some trade with based on the hedging. I recall he has just sent me one WhatsApp or something. If you can share Nines Mapanaji once more, then I can share with that. What is by hedging the process for entire period of 1 year or so? How much what is the percentage of your earning on the Nifty future trade? Or any one of you has shared that WhatsApp with me long back. So hedging is being 10. Yes, minus Mapanaji. He hedged it. He traded in that particular things. His 1 year's performance was 82%. 82%. How much more you want? Phenomenal success. Excellent success he has got. Excellent success he has got. He is giving you the feedback that by hedging, his performance is not reduced. By protections, losing trades, part of money he has recovered, and his performance goes to 82% of return he has got. I think it is on the principle. On the principle, he has got this thing. So this is the hedging never reduces your performance, rather it gives a good result. So hedging is very easy. Start with simple hedgings. In this report I used to write it very clearly. If it crosses 9972, buy the future, hedge with the 9950 put option. Similar way you can hedge it in your intraday trade. So similar ways you can hedge it also. So when you buy, put option is there to hedge you. When you sell, call option is there to hedge you. This is the simplest hedging process. You can formulate many other things for these things. But when you trade for the equity, small quantities and all, you cannot able to hedge, rather go with the stop loss. So selecting the stock, someone was asking, and Mitesh ji is also asking how to select a best stock for investment. So just go here, how to select best stock for investment. So this is the query if you put in our YouTube channel. Many videos I have given. Many videos I have given. So here choose the best stock for investment or short-term investment. Best way to choose for the stock. So you can BTST how you can use in the Fibonacci rule. So these are the many things you will get here. Go with the first two videos. There is a specific ratio studies are there. So using that specific ratio studies, you can select the best stock out of 3 or 4 stocks and you can get that. So if you have our Webtrade software, directly you can utilize that and get the best stock also. So this is how if you trade, and trade requires two more very important factors. One is consistency, second is control over the greed. Control over the greed. So Nainas Mapanaji, if you share your contract notes, I'll be very happy to share in the next session with the people. And these hedgings, those who are initiating also, they are getting the result. I think few days back, Om Prakash ji also sent me one email with the hedging when I just sent one email on the weekly trend, how it has performed. Weekly trend, how it has performed for that particular day. For this last week, I think first day of this week, see the Om Prakash ji also shared with me, he has got some profit here. So hedging never reduces performance. It is a wrong idea to say hedging reduces performance. Hedging gives you a comfortable earning. You have to believe it. And second thing is that if you have a unlimited grid, none of the softwares, none of the method, no one can help you. Because if you have a grid that every day some 20%, 30% should come, monthly it should be 500% return. There is no such method. There is no point in joining this kind of program or using any of the softwares. There is no such softwares available. And one very important fact is, traders, those who demand more from the market, when I categorical in this particular point, traders whose expectations are very high from the market. Those who say that I want a call which is 100% accurate. I want a software which is 80-90% accurate. I need a software greater than 90% accurate. I want to make some 100% return in a month. Those traders, I can give it in writing. They have never earned 1 rupee from the market. When they put you this query, till that point, if they are true to their consciousness and if they share their trade experience with you, and if you look into their trading portfolio, I can assure you those traders, those who are hunting for a 100% accurate method, 90% above success software, 100% return per month or per day, whatever may be, those traders have never earned any rupee from the market. Reason is not the software, not the method, not anyone involved in that. Because of their consistency and trust factor. They never trust on anything. That is a human behavior. That is, if you are falling on that category, I'm sorry to give you a straightforward answer. However, this is a human behavior. When your expectation goes very high, you perform less. When in any time, when your expectations are too high, that time your performance will come down. When the traders will expect less, their performance will go up. Performance will go up because they will consistently follow one method. They will look very closely to that method. They will have a complete faith and trust on that method. So they will be methodical traders. They will be very, very scientific traders. So for that, they will get a better result. If you ask me 100 questions, any 100 different ways, in none of my video so far you will find out in the YouTube channel, or none of my report you will find out where I have told trade without hedging. I'll never utter that word. Any trade you do, you must hedge, because we are uncertain about the market. We are just calculating. We are fortunate that market has accepted our calculation, but it is not sure that every day it will accept our calculation. It is not true that every day that the stop losses will never hit. So, and one very important factor about market is, though we have a stop loss mechanism, critical days anyone has trade. Can anyone will tell your experience on the down freeze market days or upper freeze market days in the Manmohan Singh's government time, when that second UPA government has formed, first UPA has formed, or Satyam crisis has come, or subprime crisis has come? If you are a trader, can you tell me how many of you got a chance that particular day to exit out of your trade even though you have a stop loss? You will not get the time for that stop loss to trigger also. Hardly few seconds the market will be upper freeze or down freeze, or something will happen. Those who have entered in the Satyam type of crisis day, you will also know that you will not get the time to come out of the trade. There are times when, that is, you can say, I remember about Esser oil, I remember about Satyam, I remembered about the subprime crisis day, I have remembered about those days of Manmohan Singh's UPA government 1, government 2 days. You won't get time to come out of the trade, though you have put the stop loss. It won't go. You can shout on your broker. Broker will say that much of it was in pipe, that the trade didn't happen. Trade didn't happen. So the trade is got stuck off. This that happened. It didn't happen. So if you have a hedging, at least you will get protected on such days. Imagine all 99% of days you are successful. One counter you have opened, and that by misfortunate factor, it has fallen like Satyam computer or something, some news has not come to your ear, it has happened. All your earning, everything will perish. And many of you, I'll not only this, many other experience I can share. When the silver has fallen from 72,000 to 40,000 range, you, if you are a commodity trader, you could have experienced this few years back. When 72,000 to 45,000 range, the metal silver has fallen. How long it took? How long it took? Hardly 3 minutes. Because of that, your spot exchange and everything has went into a big loss and big drama has happened. Many thousands of crores of money is being looted out. We are blaming that they have made it. This is the real reason. Hardly some 3 to 5 minutes on that particular bad day, you have fallen to a great extent. There is a 50%, near to 50% correction. And the further days, it has gone down to 20,000 level or 25,000 level. Many people is got looted. That is the reason why I used to tell that most of the traders, please stay away from commodity market. Same fate has happened for the crude. When it was at 145 rates, $145 per barrel, everyone was talking about 175 to 10. From $145 to $90, how much time it has taken? If it has taken 7 days, 10 days, right, it is great. 7 days, 10 days time, then I can say that okay, you have a stop loss, you come out, you got things. This has taken no time, near to $99 has happened in a single day within few minutes. Even though those who have a stop loss, they could not get a chance to come out. That is the time for which you have to prepare yourself every day, every minute. As a trader, you have to learn from this experience and you have to prepare for that day. You have to think that yes, that particular day is today. Gautam, how I make this thing? The connection gone. Just released. Next week, Nifty expectation 9973 above uptrend, 9920 below downtrend. And these are the targets. And as compared to the last week, the Nifty volatility has slightly increased from 7.6% to 8.11. Bank Nifty volatility has fallen as compared to last week, 9.6 to 8.82. It has fallen. And if you are, these are the targets and this is the process I have given for weekly trade. And 1SD performs very good in the weekly trade. And previous week, whatever the analysis I have done, previous weeks for many counters I have done a analysis previous week for September 1st to the 7th. If you can search here. Many analysis I have done last week. So for Nifty, as you have seen, Aurobindo Pharma, Sun Pharma, Axis Bank, it has given a great result. So Axis Bank, we have expected till these things. So till 95 you have achieved, and same way for the Sun Pharma. Sun Pharma also great success it has given, gone to 500 level on the first part of the week, then retraced back, and it is that 464, 65 level also it has come today. Aurobindo Pharma, that also weekly level it has given a great success. So 735 level in the also we have got. So it has a great success. Just try to follow those things. Uh, Try to follow that things. Try to follow those things. Take the readings and try to follow those things. And this is the thing you can get this trend for the Nifty. I have taken 9946 level. This is the first cycle level. Must for trading that. And one new section I have added from the last week from this report. Option strategy in the contra trend. You have to take these things. If it is giving you a uptrend breakout, try to take a contra trend. Means 10,000 put option of October you sell, 9950 put option of September you buy each one lot and book the profit at once the uptrend gives the first target. Similar way, if the downtrend is giving the breakout at 9920, similar strategy you can form in the call options. Sell a call option of October, buy a call option of September, each one lot, net credit strategies. And once it goes to the first or second target, try to book the profit. Small profits you can get, but good profits you can get. So good profits you can get. So this strategy, only one strategy I am promoting in this particular weekly trend level. Try to follow this strategy. Even though if you are not initiating this strategy, do a paper trade at least and see how much result, what is the result it gives. So, and if you have a proper trade plan like this, long run your portfolio will become very healthy. Surrender the greed. It has not given you anything so far. So just surrender that greed for time being at least. If intraday doesn't work for you, stick to the weekly trades for a couple of months. On from that. Once you are comfortable, continue with that. And have a limited expectation from the market. It will reward you more. So, and as a buyer, you are being entitled with many support activities. If you have any query associated with any concept, you can directly put the email. These are the email IDs are always with you. Installation related supports and other things we used to give over phone. Any trade related queries, do not hesitate, post it to the email so that at least we will know what is your concern. And you are using a best system of trading. I can tell you that the softwares what we are supplying or the softwares what you are using, it is much advanced than the other softwares. You can experience it. Today's Nifty low, can anyone will tell me? 9920 level. Monday it has given you breakout. Today's Nifty low was this one. And it was struggling in 58, 60 level to 50 level. That is what it was struggling. And near to 42, 9942.2 it has last traded. So this is also very close to one of your target. Same thing you have got in the Bank Nifty also. So 360. So this is the means this week's last traded price if you can take it. So here 368. So this is also one of a very close near to one of your target. You have got it. So this is the performance of this particular method. So this is the performance of this particular method. Just think, this method requires that you must trust it. If you do not have a trust in any of the method, then how it will work? You have to implement it in your trading, then only it should work. So you are using a best system. Only thing is that you have to implement and form a style of trading. Your style of trading is very simple, hedge it. That is your style of trading. Once you hedge it, all kind of that trade will start rewarding you. Maybe it will be small. Be satisfied with that small profit. Definitely it is going to give you a great profit. When there is a great move, beyond 2 or 3 cycles happen with no time, you will be highly beneficial. So stick to this trading practice. Whatever the materials you have, whatever the educational materials you have, do not keep it in self. Try to read it. Whenever time permits, try to read it. Whether it is a small portion, do not worry, read it so that you will at least learn some new things and keep interacting. Whenever you have certain concerns, certain queries, so just to, instead of dumping that method, at least ask one question, that what happened, why I failed in this trade, what is the things has happened. So it is not means many of you has asked many questions. It is all of you should ask the question. So that should be the good way of communicating with you. Keep posting your queries. Keep following this trade idea. Again, we'll meet on the last week of this month. If you have any query to address at that time, be prepared and ask me that. And Monday, join for the live session on the option scanner, how to use it, how to use that option scanner I will be discussing. So with this, I will be ending today's session. Thank you very much. Thank you for your time.